To the mounting concerns over China, President Trump saying earlier that talks with China are going well. This coming as Bloomberg reports that U.S. officials say China is actually walking back on previous trade pledges. Joining us now, Forex.com senior market analyst Matt Weller. Matt, you think that the outcome is a truce. Explain exactly what that means and when it might come.
Sure, Jackie. So we've seen these tensions elevated for an extended period of time now. But at the end of the day, we expect that Trump will follow the same script that he followed through trade negotiations with South Korea and also through the trade negotiations we saw around NAFTA. Basically, he came in like a bull in a china shop, no pun intended, imposed tariffs, interrupted the status quo, and then went on to settle for a deal after a couple of months that was not too big of a change from where we were initially. So we think we're nearing the end of the China saga, and Trump may now look to turn his attention to Europe and auto tariffs next.
All right, it has been a huge saga, but meanwhile, the U.S. and China trade war cost the U.S. economy $7.8 billion, almost as much as he is now requesting for his wall, Matt. That's according to the National Bureau of Economic Research study. It's also approximately 0.4% of our GDP. That is staggering when you think about it. Reports saying that the trade summit keeps getting delayed. Would a summit necessarily achieve anything?
Yes. Yeah, we believe that if we can get a summit, and right now the latest headlines were suggesting we might not get one in early April as was initially expected. But if we can get one in Mar-a-Lago in some point in Q2, it's likely in our view that a trade agreement will be able to get hammered out. A lot of analysts are pointing to the sticking points in this debate. And I think unlike the situation in Brexit, where there's a lot of direct damage from the Irish backstop and some strong opinions, in this case, we really just need Trump and President Xi to come to an agreement. They're the ultimate decision makers, and call it cynical, but I don't think Trump really cares too much about intellectual property rights or technology transfers. We think that he's far more interested in his persona, the way he's viewed as the deal maker in chief, and especially after, according to media, getting outmaneuvered at the government shutdown and around that border wall, we think that Trump is sort of due for a win. He's looking for an easy win here, so he'll look for an opportunity, if one presents itself, to declare victory on this U.S.-China trade talk.
Well, Jamie Dimon said that, what he's seen so far, it seems like the president's nailing it.
I hate to agree, but to an extent, it's true. I was very skeptical of the tariffs when they were initially imposed. It's literally economics 101 that the tariffs can have a negative effect on economic growth. And they certainly have, as that NBR study showed. But by producing that little bit of leverage there, by manufacturing that leverage against China, he's at least brought them to the negotiating table. I don't think we'll get a grand agreement that solves all these problems for years to come, but certainly something he can take back to his base, declare a win. Maybe we get some more agricultural imports from China, but ultimately, I think we might be looking to close the book on this trade war.
Okay, Matt, I know a lot of investors would certainly like to close that book, as you mentioned, and at least focus on some of the other issues that are on the table at this point. But great to see you. Thanks for your insight.